Hello guys, welcome back to Zodiac Trader Show. We'll continue the price action strategy course. So today will be the number two course. It will be the second course. So let's continue. Okay, so that in the previous course we understand the very basic of candlestick, and here we see there are different status of a candle. So it is extremely important for you to read and understand like the form, the different shape of the candle, because it really helps you to understand um, the market forces. So here, as you see, uh, when you're seeing this straight line, that means there's no volume or whatever for the price. Therefore, you see like a green small like rectangular here, that this is actually having this small volume right here, and so that's why you're seeing the price struggling to go up, but it doesn't really go up, so it has to stuck here for the green section. That's why we call this a selling pressure, because the volume keep hitting on the below. And on the right, we see the buying pressure. We are seeing the quite opposite situation. We're seeing the price doesn't hit, or it doesn't have trading volume whatsoever on the bottom side, and that's why you see the green square, you see the green area on the top, because the price, struggle to I would say the price struggle to go down, because there is a buying pressure, because it will be extremely difficult for the price to go down. You see, there is no volume or whatever on the bottom side. That's why you see volume up here. You see the volume up high. That's why the buying force is keep driving the buying power to go up. And here you're seeing the different form. So the previous one, the green one, is about we are describing as a upward uh, situation. That means, in general speaking, the stock price goes higher. It doesn't go lower, even though it has like temporary selling pressure, but it still go higher. Okay, but on the right side, we're seeing it's all red. Okay, that means despite of different temporary shape of the candle, the market, the force still drives the stock market to go down. So here we see this selling pressure right here, that we are seeing volume on the downside. We're not seeing volume on the top, because there is no volume whatsoever. So the volume is centered on the bottom. So we're calling it selling pressure. But in the end, the price still go down. That's why we're labeling the color as red. Okay, here we see the buying pressure. We're no longer seeing the red square uh, space on the downside. We're seeing um, the red area on the top. We're not seeing any volume right there on the on the below. That's why it's a buying pressure. But despite of all of these market upward movement, the price, generally speaking, still go down. Okay, so it helps you to understand what would be the bigger picture and the smaller picture. So it is very crucial to understand the price movement and the price action, because for each temporary movement and actions, there will be another smaller frame. Okay, we've been shorter frame of price movement embedded in the long term trend. Okay, so Here you see this bearish momentum decreasing. You're seeing this big downward momentum. You're seeing the entire candlestick labeled as big reddish color. You're seeing much bigger red area, and you're seeing a huge one. And then you're seeing this momentum slowing down because you have less reddish area. And then when the price is hitting the support line and it's hitting somewhere with support, that means there is a buying power right here supporting the price level, and therefore you see very little downward momentum right here. Okay, so this is how you see this bearish momentum decreasing. It is a downward momentum, but still this momentum goes much slower given time. So it shows a clear interactive process of how the buying power is diminishing through a big downward momentum till momentum starts to slow down, and then in the end a very little downward momentum. So in a downtrend situation, when you get signal that downward trend is weak, it happens at support level, wait for reversal candlestick, your entry point. So what are you going to do? You know the price is going to hit a support level. That you may start to see the price starting have a pivot point, that you'll start seeing a reversal technical. You'll start seeing the price from going down to going up. And therefore you can start placing your bet near the support level, which is the very entry point. And that is very important. So look at this chart. You get a much better picture of what's going on. So here, in the first downward market movement, it's a long one. Okay, you're seeing the price hitting the support level, and yet you see less reddish area, and now you see more greenish area. That means more buying power than the selling power. That's why it's a good place to place an entry point, to place a bet right here. So instead of betting the price would go down, you place the order so you can buy the stock. And then the stock goes high, and it's consolidated for several times. It hits a resistance level. It didn't go up. It remains a horizontal movement, and then you see the second huge market downwards. That you're seeing the price again fall to a certain support level, and you're seeing a lot of red area. And now you're seeing the second entry. You're seeing the second opportunity to place your bet to long the stock. Okay, so you yet wait for the reversal signal and you long, and then you are waiting for the third one because there is another strong market downward signal, and it's yet hitting the support level the third time. Okay, so we are here looking at a bullish momentum decreasing. Okay, so it's very similar but labeled in different color. It labeled in a green one. Okay, so you see the strong upward momentum. You start seeing bigger greenish area, and then you're seeing the momentum starts to slow down with less greenish area, and then you see the greenish area become like very low, very small. So it's down. You're seeing the bullish momentum diminishing. Okay, you're seeing the market. There are people continue to buy, but there is more selling force. There is more selling pressure on the upside. That's why the momentum is decreasing. is diminishing. Okay, so this is basically an uptrend situation when you get signals that uptrend is weak. If it happens at resistance level, wait for reversal candlestick, your entry point. So here is another picture that you're seeing the decreasing bullish momentum and then the doji form and price nose dives. So the doji is a very classic signal. In the later slides, we will talk about doji star. Here, in the blue area, you see this green diminishing buy power. So it's hitting a resistance level, which is the white line. And then the green diminishing power, the diminishing buying power hits this resistance level, so the price cannot hold, and it is a reversal. And then it happens with a reversal price signal. You start seeing the price going down massively. You see this massive reddish area heating down. So it's a huge reversal trade. So if you place your bet on the doji point right here, which you see a very slim line, a reddish slim line, and it crosses the white line, that is the doji star. When you see that doji star, that tells you the market is going to reverse. So instead of placing the buy order, you start placing the sell order. And now that's how you make a lot of money. And now you sell the stock. You sell the stock, and then you're making that much money. Okay? So that's the case. There are different ways that we call this straight line. That you remember we mentioned before. We say on the straight line, there is no volume. There is no very few market liquidity. That means the market doesn't really, hits right there. It's because their prices may travel to certain price level only once or twice. So that's why you see a long tail. You see a straight line on the bottom part of a candlestick. So that tells you that the market made a significant fall, then quickly retreated from this price level. This is often seen as a bullish signal that you're seeing. For example, if you trade you open any brokerage account and you have a candle chart, an interactive one, and you can observe how these reddish square actually move. I highly recommend you to do so because it shows it was a strong selling pressure. It could go all the way here, but then the buying power outweighed the selling power. That's why you see this reddish square diminishing to like this. That means you have stronger buying power than the selling power. Okay, so reversely, you see this tail, and you see the green one. That you are seeing this. It started as a buy power. It started as an uptrend, but then the selling pressure is too much. Then that's why you're seeing this greenish area diminishing from big one to the small one. And that's how you call this a very strong selling pressure in the upward trend. Okay, so a long tail on the top part of a candlestick tells us that the market made a significant rise, then quickly retreated and fell from this price level. So this often viewed as a bearish signal. Okay, remember, as we have said, you have overwhelming selling power here. That's why you only get a little bit of buying power right here. That's why we view this as a bearish signal on the right side. And the left side, we started as a selling downward trend, but then you're seeing overwhelming buying power. That's why you only get a diminishing red sector here. That means you are witnessing a bullish signal because you have overwhelmingly powerful buying power is forming right in front of your eyes, which is the left side. So in uptrend situation, when you get signal that uptrend is weak, it happens at resistance level. Wait for several candlestick, your entry point. So it is extremely different. Extremely important for you to place the right trade in the right time. You need to place the trades in the entry point. Okay, so you see here the chart, you see the white line, which is the resistance level, and the yellowish line, you have two. So now you're seeing the price continue to struggle in this area. Okay, so you're seeing the price going up to this price level, which is trading at 100, and it failed twice and third times. So it fell 3 times near the 100 price level. That's why we call this as this resistance level, because the price continued to hit here but unable to break through, and it went straight down. So you have several times. Okay, so you see the decreasing bullish momentum and the doji forms and price nose dives. Okay, another time we're seeing another doji star. In the previous chart we saw a doji star. We see a slim line crossing this resistance level, the white line. Also we're seeing this slim line of two of the reddish line crossing together. That's a doji line. Okay, so a long tail on the bottom part of a candlestick tells us the market made a significant fall, then quickly retreated from its price level. This is viewed as a bullish signal. So the right one, a long tail on the top part of a candlestick, tells us that the market made a significant rise, then quickly retreated and fell from this price level. This is viewed as a bearish signal. So here we understand there are different types of trend. We have uptrend when the price moves up, simple enough, and we have the second one, downtrend. We can see the price moves back down, and then we're seeing the price moving sideways. There is no direction. We see the price moves horizontally. It moves nowhere. It hits support line, or it continued to hit resistance line and travel between resistance line and support line. That we call this sideways. And we have uptrend, meaning we have price make higher high, which is edge, and higher low. Because according to the previous market, from the several seconds or minutes ago, the price would have a higher high and higher low. So this is what a beginning of uptrend may look like. You have the red one, higher low, higher low, higher low, and then you have higher high, right? So it could look like, it might look like a wave, and then you're going to see the price movement hitting certain line, and that will be the beginning of uptrend. And then you're hitting another resistance level. You can no longer break that resistance level, and then your price will end up having a reverse, and you start having a higher low to lower high. Okay, so you see another lower low and lower high. Okay, from higher low, higher high, to higher low, higher high, and higher low, higher high, to higher low, and another higher high and higher low, and reverse, and becoming lower high to lower low, and to lower high and lower low. Okay, and downtrend, price make lower high and lower low, LL, and so LH and LL. You see this is bear trend, okay? So in the bear trend, we're seeing lower high and lower low. Okay, what does it look like? It look like a lower high, lower low, and to a lower high and lower low, to a lower high and lower low until we hit the reverse point. So we have a lower low, higher low, um, lower high and higher low and lower high. Okay, so will be end of the bear trend. Okay, so we start from the LH, which is start of the bear trend to end of bear trend. So this is what a trend actually look like. So in reality, the price may look a bit different but similar, like depending how you label it. So here's this example. So you have HL, which is higher low. You have higher high. You have lower high, and you have lower low. You start from lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, which is a downward trend, and then you start having a little bit of upward trend, higher low, higher high, higher low, higher high, but unable to break through the price level. That's why you have another reverse. You have a higher high to a lower low and a lower high to a lower low, and then you hit that support line, couldn't break through, and that's why you and having another bullish trend, a small one, and then you reach a higher high and higher low. Okay, so you're gonna ask yourself, you have two high high and high low. You have these two area that shows you now the price might be expecting a reverse because it has show uh, like a small uptrend right here. So you have to think to yourself, okay, so what does sideways trend means? So the sideways trend means the price stuck between resistance and support, and the price is not moving to any direction. So you're seeing this price bouncing between resistance level and support level and repeatedly. That's how you identify sideways trend. So in reality, uh, it, like some traders ask me if you can trade the sideways. My opinion is best not to trade sideways because it will lower your ability to maintain profitable, because by trading too much of the sideways you lost stability to trade the real momentum, right? You have lost ability to to identify the real uptrend or the real downtrend. So in live market, it will look like this. You see this a big box, and then the market will bouncing in a small box. You see this resistance line, the red one. You're seeing also the support line, and the price bounce back and forth between this little box. And price will reverse from support level. So you see when you draw a support level, it always come back to the support level. Okay, so this is like sideways. It doesn't really break through and go up. It always go back to the support level. So you see when it crosses the support level, you start finding opportunities to buy. And here, it it hits, but then it becomes another downward pressure because it finally breaks the support level. It becomes a negative trend. So it's like testing the support level. When you hit it for more than 3 times and the price level break, and you're seeing the market trend will further reverse. So today we have looked at different market trends. We have learned how to identify the different patterns and to understand the different form, high, 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 low. We also understand the candlestick and what the straight line actually look like, the shadowy slim line actually mean, and we actually observe how the candlestick could be applied when observing the diminishing buying power and diminishing selling power. It's really amazing interactive process that you see price continue to fight against each other, the buying power and also the selling power. That's why the market is always people betting on different things. People would bet for long, people would bet for buy, people would bet for sell. Okay, so that would be all for today, and I will see you in the next episode. Goodbye.